Global stocks recover losses as worries subside over Chinese AI startup DeepSeek. Boeing reports fourth quarter losses amid operational challenges, but are there clearer skies ahead? And we explore Africa's Energy Summit in Tanzania as leaders promise affordable electricity for 300 million Africans. Hello, I'm Taiba Aydin with the latest business and finance news here on TRT World. Asian markets bounced back on Wednesday, tracking a recovery on Wall Street. Stocks in Japan and Australia rose in holiday-themed trading, with the benchmark Nikkei rising 0.84% and broader topics up 0.7%, while Australia's main index also rose around 0.7%, reversing losses from the previous session. Overnight in the US, key indices recovered ground from the sharp sell-off sparked by the challenge posed by Chinese artificial intelligence startup DeepSeek to the US AI ecosystem. Tech giant Nvidia picked up momentum to close around 9% higher after losing 17%, or around $600 billion in market value, the biggest one-day drop in US history. Let's get more on this now with Tim Waterer. He's Chief Market Analyst at KCM Trade. Now, Tim, fears over DeepSeek seem to have subsided. What's helped recoup those record losses?
Nice to be with you. Yeah, as you laid out there, still a down week for Nvidia, so still a bit of ground to make up. But I think what we saw is a natural bounce. Perhaps the feeling that some of the heavy selling we saw on Monday was overdone with that 70% slide that you saw. And I think some investors saw it as a value play to maybe look at getting some better entry levels on Nvidia, thinking that this may blow over a little bit more. Some of the concern that we've got at the moment around the market about, I guess, this AI race between China and the US and who's winning or who's likely to win down the track. So yeah, a value play, saw that natural bounce occur in Nvidia. But I think that the whole DeepSeek revelations this week have certainly raised more questions than answers. We're still waiting to see where the dust settles on this one. But I think investors sort of, hedging their bets in a way and saying, okay, we're not going all in on Nvidia, perhaps like we were for the past couple of years. Play a little bit more cautiously, but seeing value after that 17% slide.
And what would this ultimately mean for Nvidia? Some analysts do expect the fall to continue.
Yeah, let's see how this plays out. I think there's a lot more to go on this story, isn't there? And once again, comes back to this AI race. So for Nvidia's part there, I guess, looking at it from a glass half full perspective, if you look at their press release, they're saying that, I guess, the developments made by DeepSeek, I mean, in terms of, gaining efficiency, that can lead to more popularity or more demand for AI products, which can be, I guess, a net positive for the industry as a whole. And I guess the other argument they could make is if DeepSeek are doing this based on older NVIDIA technology, imagine what they could do if they had the latest chips. So there are some positives still to come out of it for NVIDIA. I think it'll come down to, I guess, once again, this AI race and whether the US Silicon Valley they can I guess learn some lessons from DeepSeek's I guess bang for the buck, doing more from less, talking millions, not billions. If the US can, I guess, respond, and that maintains, I guess, the demand for large AI infrastructure, then that would suit, I think, Nvidia well moving forward. But if China did start to, I guess, edge ahead in the PR stakes, and investors rein back their investment in the US AI technology, that's where Nvidia could start to feel the pinch a little bit, particularly because there are these trade restrictions and they can't, supply their latest chips to China.
And the US Federal Reserve is also due to announce its interest rate decision later on Wednesday. What's your outlook?
Yeah, that's the big one on the calendar this week, the FOMC meeting. So no movement on interest rates is expected this time around. The focus will really be on the Fed's language and whether there's been much development from what we heard from the Jerome Powell and the Fed in December, where they were projecting no longer 4 rate cuts this year, but only 2. I think we could see a similar guidance this time around. Not too much has changed. The Trump tariff story, that's still playing out in real time. So I'm not sure the Fed can really be too confident about how inflation is going to fare this year. So I think, once again, they'll be sort of, keeping the cards pretty close to their chest. If they did leave the door open to perhaps more than 2 rate cuts, I think that would be a positive for risk assets such as stocks. So it'll all come down to language and whether we see perhaps a more dovish shift from what we heard regarding their hawkish tone in December.
All right, Tim Water, we will have to leave it there. Thank you very much as always. Aerospace company Boeing had a turbulent 2024. The company is now focusing on recovery and stability as it works towards a challenging year ahead. Boeing reported an $11.8 billion loss for 2024, mainly due to labour disruptions and issues in its commercial and defence divisions. Despite setbacks, Boeing's fourth quarter results showed stabilisation with more than $15 billion earned in revenue. The company said they are restarting factories, building more planes and promising safer designs. And the US aircraft maker resumed production of key models like the 737 MAX. It expects positive cash flow by mid-2025, which has boosted shares and investor confidence. Its shares rose to the highest level since August 2024, up more than 7% before settling to close around 4% on Tuesday afternoon. There appears to be greater investor confidence in the company's recovery. Let's cross now to Brisbane, Australia and speak with aviation expert Keith Tonkin. Good to have you on the show with us. Keith, now how confident are you in Boeing's recovery timeline?
It's good to be with you. Yeah, Boeing's talking very optimistically but cautiously about how it's going to achieve its 5-year turnaround plan. And coming off a pretty horrible 2024, they'd want everyone to be optimistic about their future. There's a lot of work to do, and there are seeds of hope, I suppose, that have been planted in amongst some opportunities for improvement, but also some uncertainties in terms of the background of the economy in the US, some of the new policies that are being implemented with the new president, and a global market which is still struggling with supply chain issues. So they've got some work to do, but I guess we're cautiously optimistic that they will be able to manage that.
And given the number of crashes last year, some fatal, how does Boeing plan to regain customer trust?
Yeah, it's not very good when you have one of your aircraft involved in a terrible fatal accident, and there have been a couple last year. They'll be, in terms of their customers, their direct customers are mainly the airliners, and the airline industry is desperately hoping that Boeing can increase its production. It's got 5,500 aircraft on back order, and it's trying to increase its production rate. So that's the main thing from the airlines, to get those aircraft out of the factories and operating in the real world so that they can carry passengers where they want to go. And passengers want to know that they're going to hop on an aeroplane and walk off the other end safe and sound. So that's the other part of the equation.
And what steps are being taken to stabilise production?
Yeah, they've got a few different strands to that. The 737 MAX 8-9 program is running well and truly below its output capacity. There's an aim to have 38 of those aircraft being produced each month by towards the middle of the year. They're still trying to certify the 737 MAX 7 and 10, and when they are certified, then they'll have customers ready to buy them. The 777X is still going through certification. There's a bit to go yet, and once they have worked out those problems and they start producing towards their capacity, they'll definitely increase the optimism of the market.
And how will Boeing's restructuring impact its long-term strategy and profits?
Yeah, well, they've just gone through laying off 10% of their workforce, around 17,000 people, following the end of last year and the strike that happened. And that's part of the long-term strategy. We understand they're also thinking about divesting business units, smaller business units, from the overall conglomerate that Boeing is, to try and relieve itself of some of the effort it has to undertake to continue operating. So there's a fair bit going on. Business as usual, with a few tinkering around the edges, as I understand that the CEO is speaking of. We'll wait to see how that pans out.
All right, Keith Tonkin, we will have to leave it there. Thank you very much for joining us. A US court has temporarily paused part of President Donald Trump's executive action to freeze trillions of dollars in funding. Trump's move has been challenged by advocacy groups who say it could be devastating. Trump announced the cuts on Monday, issuing a sweeping directive to federal agencies to temporarily block funds for housing, healthcare, disaster relief, and more. Craig Boswell reports.
A D.C. federal judge put a pause on the executive order signed by President Trump, which puts a pause on federal funds, federal programs, so that the Trump administration can take a look at those programs. The Trump administration says it wants to make sure that these programs fit in with the Trump agenda, that they're being good stewards with the money. Well, a federal judge apparently didn't understand and listened to some arguments today and said, we need more information on this. So he blocked this executive order until Monday, when there will be arguments from both sides. And these will be constitutional arguments. And Democrats and many of these advocates and people that receive these funds are saying that this is an unconstitutional order, it is illegal, capricious, and that President Trump does not have the right to put a pause or to stop any type of payments to or any federal program or federal loan in money that's already been allocated by Congress. And this executive order really set off kind of widespread confusion in Washington, D.C., as it did across the nation, as these groups and advocacy groups and people who receive these funds, literally millions and trillions of dollars, were wondering if this was going to affect them. So there were big questions, and even temporary pauses in these funds can lead to layoffs. It can lead to problems with Meals on Wheels. It could lead to problems with Medicaid. Some of the Medicaid portals were down today, and that is health insurance for the poorer Americans. So there'll be arguments on this Monday. This will be a protracted legal battle. This will go well, likely to the Supreme Court, as will some of the other Trump executive orders today. In fact, speaking of that, President Trump has issued executive orders this evening. One of them is telling federal workers to go back to the office full time. And in that executive order is also a buyout for federal workers, offering them 7 months of pay if they resign, if they leave their jobs by February the 6th. That's coming up. That's pretty close. It's part of the overhaul of the federal government by the Trump administration. This is likely to set off another legal battle as the Trump administration pretty much does what they said they were going to do. They wanted to come in and shake up Washington. Now they're signing these executive orders and sending out these battles. More tests for the Trump Justice Department, who's going to have to fight these all the way to the Supreme Court. Back to you.
Now a quick look at some of the other top business stories from around the world. Australia's Science Minister Ed Husic has become the first Western official to voice privacy concerns over Chinese AI chatbot DeepSeek. It comes amid growing fears that Chinese tech firms may harvest data for intelligence purposes, echoing past concerns about Huawei and TikTok. Meanwhile, Donald Trump called DeepSeek a wake-up call for the US. The European Commission has proposed reducing reliance on Russian fertilizer, with tariffs set to rise from 6.5% to 100% over the next 3 years. The proposal follows EU leaders' call for a 50% increase in duties to counter Russia's new export taxes. In 2023, the EU imported 3.6 million tons of fertilizer from Russia, valued at $1.34 billion, more than a quarter of its total imports. The world's largest luxury brand, LVMH, has reported better than expected sales, with a 1% rise in fourth quarter sales, driven by strong holiday demand for fashion and handbags. The owner of luxury brands like Louis Vuitton and Tiffany posted revenues of $88.27 billion for 2024. Its stock is up 18% so far this year, rebounding from a 13% drop in 2024. Still ahead on the programme, African leaders gathered to push for electricity access to 300 million people at the Africa Energy Summit. We'll have more on that after the break. Google has told Europe's top court that EU fines punished the company's innovation and success as it appealed the penalties. A decision in the landmark case could come down in a matter of weeks. Alex Cadier reports from Brussels.
Well, Google has urged the EU's top court to annul this record 4.3 billion euro fine imposed on it 7 years ago for antitrust violations. The EU claimed that the tech giant was unfairly using its market advantage to push consumers out of the market, something that Google denies. But they went further. They said that this record fine punished Google's innovation, that Google was unfairly targeted by the European Commission because of its success. Now, just a few months ago, a court in the European Union pushed back against that, took side with the Commission, saying that the fines imposed on Google was lawful. That will now go to the Court of Justice of the European Union, which will make a decision on this in the next few months. That decision would be final. But there is a political context to this, which makes this all the more interesting at the moment. Donald Trump, the new US president, has made it clear he wants the European Union and others to treat American tech giants fairly. So there is a question as to whether or not there may be some political blowback from this court case as well. Alex Cadier, TRT World, Brussels.
Almost 600 million people in Africa lack access to electricity. That's more than half of the continent's population. To close the gap, various projects are taking place to increase Africa's electricity output. The African Development Bank Group, a financial provider to its government, has approved a $10 million investment for sustainable infrastructure. The investment will fund climate technology entrepreneurs across sub-Saharan Africa, projected to create over 66,000 jobs. The IMF's Resilience and Sustainability Trust is also emerging as a key supporter to African countries in addressing their energy needs. The trust is set to invest $25 billion in Africa's renewable energy sector, increasing electricity production by 20%. Analysts say that investments in green energy could boost GDP growth by 0.8% each year over the next decade. And key deals were struck during the Mission 300 Africa Energy Summit, an initiative that hopes to provide electricity access to 300 million people across Africa by 2030. African leaders agreed on the Dar es Salaam Declaration with goals to lower electricity costs and boost clean energy production. In the most recent summit, the Islamic Development Bank Group pledged $4.65 billion to Mission 300, involving investments into renewable energy development and rural electrification. Joining me now for more is Charles Kombe in Dar es Salaam. So Charles, tell us more about the Dar es Salaam Declaration and how African leaders plan to deliver this affordable electricity to 300 million people.
Well, thank you so much. It has been 2 busy days here in Dar es Salaam, the 27th and 28th of January this year. As yesterday, the summit was concluded, and we have seen it has brought a significant achievements as there were adoption of Dar es Salaam Energy Declaration, where now more than $40 billion have been secured from the World Bank and the African Development Bank. And also here in Tanzania, there is the launch of National Energy Compact. So the summit is more of making Africa one of the continents that has access to electrification, mainly also in rural areas where electric is a bit challenging.
And how important is renewable energy in closing Africa's electricity gap and ensuring sustainability?
Well, renewable energy, particularly in Africa, is quite an important area where we all know now the world is focusing on cleaner energy. Here in Tanzania, for example, we have the Tanzania Electric Company Limited, which now is increasing its diversification in making sure that it also focuses on projects that are safe to the environment and not only those kind of energies that are harmful to the environment. So this summit has been a great achievement to African countries, and we know exactly the impact of this will see electrification to more households in Tanzania and even Africa at large.
And how will this electrification drive transform the continent's economy?
Well, we all know that any development depends on electricity, and availability of electricity in Africa will make even small businesses to grow more and the bigger one, and also attract investors in Africa. So whenever you have electricity, investors will start flowing in. And when you have more investors, it means that the economy will grow fast, and we'll see Africa growing drastically within the coming period of time.
And how do governments plan to attract investment for Mission 300?
Well, the Tanzanian government has set some plans in making sure that there is reliable energy in the country. We currently have the big mega project, which is currently almost complete, the Julius Nyerere hydropower project, which generates 2,115 megawatts of electricity. So with this huge project, that means that there will be reliable energy in the country, and with reliable energy, investors will come in and invest in the country. We currently have many investors coming in, and we hope that with the availability of electricity and the standards that the government is setting to welcome the investors will make the country have more investors in the country and do business that can impact even the lives of the people here in the country.
All right, Charles Comby in Dar es Salaam, thank you very much for that update. Now, Bosnia and Herzegovina's healthcare system, despite a substantial budget, is grappling with insufficiencies, political interference and growing discontent among healthcare workers and citizens. From protests to dwindling resources in maternity hospitals, the challenges are mounting. Simir Sejfovic has more on the story from Sarajevo.
The healthcare system in Bosnia and Herzegovina, despite having one of the largest budgets in the region, is facing significant challenges. Divided between two entities and one district, the system struggles with inefficiency, political interference, and growing dissatisfaction from both healthcare workers and citizens.
Politicians are interfering in the federal healthcare system. They are deciding who will work and what needs to be done, forcing a significant number of healthcare workers to leave health institutions in the federation. Simply, politicians and parties must leave healthcare to professionals. I believe there has never been more money and resources available, yet the services offered have never been worse.
While the federal healthcare budget remains substantial, the federal minister of health is rarely seen participating in parliamentary sessions and often avoids responding to media inquiries. Meanwhile, dissatisfaction among healthcare workers grows, driven by low salaries and poor working conditions. Citizens who rely on these services are not only dissatisfied, but are increasingly fearful of seeking medical care.
The issues extend beyond general health care. The Foundation Baby Steps, which advocates for rights of parents, future parents, and children, highlights a specific and life-threatening crisis within maternity hospitals: the rise in deaths of babies and mothers in childbirth.
We often hear from women who have gone through traumatic experiences in maternity hospitals. Many are so affected that they choose not to have more children despite wanting them because they cannot overcome their fear. This directly impacts the birth rate. There are many problems in healthcare, but the most pressing is the inhumane treatment of patients and the disrespect for their rights. We always emphasize that childbirth is not only a health issue, but a matter for the entire state system.
Bosnia and Herzegovina's man-made health crisis is leading to rising dissatisfaction and a growing call for accountability. The question posed is, how much longer can the system withstand these challenges before meaningful reforms are made? Simir Sejfovic, TRT World, Sarajevo, Bosnia and Herzegovina.
Well, that's all your business news for now. Thanks for watching. The Newsmakers is up next.